All right, let's dive into the world of specialty chemicals with this company, Clean Science and Technology Ltd. You sent over their investor presentation and financial reports, and, well, they paint quite a picture. So we're going to take a deep dive into what makes this company tick,
hmm
what they're doing that's catching the attention of investors, and what it all means for their future.
What I think is really interesting is that this company isn't just participating in the chemical space. It feels like they're really setting the pace for innovation and sustainable practices within the industry.
Okay, so let's break this down. For those not already in the know, who exactly is Clean Science and Technology Ltd.? Their investor presentation makes some pretty bold claims.
Yeah, they're positioning themselves as a major player on the global stage. The presentation highlights their impressive growth and really emphasizes the fact that they're one of the fastest growing and, notably one of the most profitable specialty chemical companies in the world.
No. And they definitely don't shy away from highlighting their commitment to sustainability, do they? Zero liquid discharge facilities. A majority of their power sourced from renewables. It seems like they're making a statement. But are these just buzzwords, or is there real substance behind these claims?
I think their track record suggests they're walking the walk. Achieving zero liquid discharge in their manufacturing facilities is a significant feat in an industry often associated with pollution. It means they're not releasing any wastewater into the environment.
Yeah, that's a big deal. So it sounds like they're not just jumping on the ESG bandwagon, they're deeply committed to it. Now let's talk numbers. Their financials for the 9 months ending December 31st, 2024 show a 20% revenue growth compared to the same period last year. Plus, their EBITDA margin is increasing, meaning their profitability is improving. As an investor, you're probably wondering, is this growth sustainable?
Well, their revenue growth is definitely eye-catching. But what I think is particularly impressive is their EBITDA margin. They've managed to increase it sequentially, indicating improving profitability despite the current economic conditions and rising input costs. So this tells me they have a good handle on managing their expenses and pricing their products strategically.
That makes sense when you consider their focus on developing these unique in-house manufacturing processes. They're not relying on off-the-shelf solutions, which likely gives them a cost advantage.
Yeah.
But how unique are these processes? What sets them apart from the competition?
Well, their innovative approach to production, particularly their use of catalytic technologies, likely translates into greater efficiency and lower costs. It's kind of like a chef's secret ingredient. They speed up the chemical reactions, making production more efficient and less wasteful. This translates to lower costs for them and potentially more attractive prices for their customers.
So they're not just being green, they're being cost-effective too. Clever.
Yeah.
Now, I'm curious about their product portfolio. They cover performance chemicals, pharma and agro intermediates, and even FMCG chemicals. That's a wide range, isn't it?
It's a fairly common distribution for specialty chemical companies. Performance chemicals often have a wider range of applications, leading to higher demand and revenue. But what's important is the balance. Clean Science and Technology's diversification across these segments reduces their reliance on any single market, making them more resilient to fluctuations.
So diversification is key. And speaking of reaching various markets, their investor presentation highlights that they have the largest global capacity for MEHQ, BHA, and AP. You as a savvy investor might be wondering what those acronyms even stand for, and more importantly, why should you care?
Well, those are some important chemicals in various industries. MEHQ, or methylhydroquinone, is a key ingredient in things like acrylics and resins. You'll find BHA, or butylated hydroxyanisole, as an antioxidant in food and even cosmetics. And AP, ascorbic acid palmitate, is a form of vitamin C often used in food and skincare.
Okay, that's a mouthful, but I'm starting to see the picture. They're involved in some pretty essential stuff. But why is their leading position in these chemicals so significant?
Well, most companies source these chemicals from just a handful of suppliers. But Clean Science and Technology, they're the leading global producer. So think about the advantage that gives them. They can control costs, ensure quality, and even influence market prices. It's a powerful position to be in.
It sounds like they've positioned themselves strategically. Now let's circle back to their sustainability initiatives. They're going all in on renewable energy with a whopping 65% of their power consumption coming from green sources. And they're not just stopping there. They're aiming to plant over 50,000 trees over the next 5 years. It seems like they're taking a holistic approach to sustainability. But how scalable is this?
That's a good question. Their zero liquid discharge policy is admirable, but as they expand, can they maintain these high standards? And what about the cost implications? Are they passing those costs on to consumers, or will it impact their margins?
That's a crucial point. It's one thing to be sustainable when you're a smaller player, but as they grow, maintaining that commitment could become more challenging and potentially more expensive. It's something to keep in mind. It's definitely a balancing act.
Now, looking at their revenue breakdown, it's interesting to see that their performance chemicals segment is their biggest revenue generator, followed by pharma and agro-intermediates, and then FMCG chemicals. Is this typical for a specialty chemical company?
Yeah, that's a fairly common distribution. Performance chemicals have a broader range of applications, so that leads to higher demand and revenue. But the important thing is that Clean Science and Technology isn't putting all their eggs in one basket. This diversification across different segments helps them weather market fluctuations.
Right, it's like having a diversified investment portfolio. You're spreading the risk. And speaking of spreading their reach, their revenue mix shows a strong emphasis on exports, with over 60% of their revenue coming from international markets. They're not just playing on the local field, they're competing globally. Absolutely, and that global reach really speaks volumes about the quality and competitiveness of their products. They've managed to establish a strong presence in various regions, which is no small feat in the competitive world of specialty chemicals.
It seems like they've got a solid foundation. Now, their investor presentation repeatedly emphasizes their commitment to sustainability and ESG initiatives. We've already touched on their zero liquid discharge policy, but their financial reports show they've also invested 16 crore rupees in social responsibility activities over the last 3 years. That's quite a significant investment. What are they focusing on?
Well, they're targeting key areas like education, healthcare, and medical relief, as well as vocational skill development. These initiatives demonstrate a commitment to giving back to the community and align with the growing emphasis investors and consumers are placing on a company's social responsibility and ethical practices.
So they're not just talking the talk. They're putting their money where their mouth is. Now let's shift gears and talk about their future plans. Their investor presentation mentions significant greenfield capex planned for new products. Can you break that down for us and explain why it's important?
Sure. Greenfield CapEx refers to investments in brand new facilities or expansions. So in Clean Science and Technology's case, it means they're building new plants to manufacture new products. This is a significant step and indicates their confidence in future demand for these new offerings.
They're basically building from the ground up. It's a bold move, but it also suggests they see a lot of potential in these new product lines.
Exactly. It signifies that they are not content with resting on their laurels. They are actively seeking to expand their portfolio and capture a larger share of the market.
And what about their focus on developing high-value specialty chemicals with limited global manufacturers? That sounds like a potentially risky strategy. What are your thoughts?
It's certainly a calculated risk. By focusing on niche products with limited competition, they can command premium pricing and potentially achieve even higher profit margins. It's about carving out a unique space in the market and leveraging their expertise to create products that are in high demand but limited supply.
So they're aiming to be the go-to source for these specialized chemicals. But what if demand for these niche products dries up? Or what if a competitor comes along with a cheaper alternative?
Those are valid concerns. Market conditions can change, competition can intensify, and unforeseen challenges can arise. That's why thorough due diligence is essential for any investor.
Right, there's always an element of risk no matter how promising a company looks. So we've got this company with impressive financials, a commitment to sustainability, innovative processes, and ambitious growth plans. But how does this all translate into their long-term prospects? What's your take?
Well, Clean Science and Technology appears to be well-positioned to capitalize on several key trends shaping the chemical industry. Their commitment to sustainable and innovative manufacturing processes gives them a distinct advantage in a world that's, increasingly focused on environmentally friendly solutions.
Yeah.
They're not just riding the wave, they're helping to create it.
Yeah, the focus on green chemistry and zero liquid discharge certainly aligns with the increasing demand for sustainable products and responsible manufacturing. But how much of a factor is this for investors? Are companies being rewarded for their sustainability efforts?
It's becoming increasingly important. Investors are realizing that companies with strong ESG practices are often better managed and more resilient to long-term risks. Consumers are also becoming more discerning, favoring brands that align with their values. So, this shift towards sustainability is likely to benefit companies like Clean Science and Technology who are leading the charge.
It sounds like they're ticking a lot of boxes. They're not a one-trick pony. They've built a solid foundation for sustainable growth. But ultimately, the question for any potential investor is this a company worth investing in?
That's a question each individual needs to answer for themselves, after carefully researching and considering their own investment goals and risk tolerance. What I can say is that Clean Science and Technology presents a compelling story.
They've got a lot going for them, that's for sure. Strong financials,
Hmm.
innovative products, a commitment to sustainability, and ambitious growth plans. But as with any investment, there are always risks to consider.
Absolutely. It's crucial to weigh the potential rewards against the potential downsides. Market conditions can change, competition can heat up, and unforeseen challenges can always pop up.
So it's not a guaranteed win, but it's definitely a company worth keeping an eye on.
Here's something I think you should ponder as you do your research. Given their focus on sustainability and the growing demand for environmentally friendly products, how might clean science and technology shape the future of the chemical industry?
That's a great question to consider. It definitely seems like they have the potential to be a real game changer. So for anyone listening who's intrigued by what we've uncovered today, what would you recommend as a next step?
Well, I always say knowledge is power. The more you understand about a company, the better equipped you'll be to make informed decisions. So I would encourage you to dig a little deeper, check out their website, read through their investor presentations, and see what the analysts are saying.
Yeah, don't just take our word for it. Do your own homework.
Exactly. And, keep in mind that while clean science and technology seems to be on a positive trajectory, there are always risks involved.
Hmm.
It's important to weigh the potential rewards against the potential downsides before making any decisions.
So should you become a clean science and technology investor? Ultimately, that's a decision you need to make based on your own research, your financial goals, and risk tolerance.
And it's always wise to consult with a financial advisor before making any investment decisions.
Well, that wraps up our deep dive into Clean Science and Technology Ltd. We've explored their commitment to sustainability, their innovative processes, their impressive financials, and their ambitious growth plans. Hopefully, this is giving you a better understanding of what makes this company tick, yeah, and what to consider if you're thinking about adding them to your investment portfolio.
Yeah, it's been a fascinating exploration.
And until next time, happy investing.